Ironically, at this point, the continued COMEX price suppression only sharpens the line at which the physical shortage overcomes the paper pricing fraud, just about guaranteeing that when we do lift off in silver prices, the force behind the surge higher will necessarily be greater due to the continued delay. Look at the data just published by the Silver Institute, no friend to higher silver prices, and try to explain to yourself for how much longer can industrial demand grow and mine supply stagnate before higher prices are required. And remember that increased industrial silver demand reduces the amount of silver available to investors. These are the wise words of Ted Butler, the man that dedicated his entire life to exposing COMEX corruption while also preaching to the masses how valuable silver truly is. Alright folks, this is a very special and important video for not only myself, but hopefully all of you as well. Ted Butler was the first person that truly opened my eyes to how valuable silver is and how high it truly can go. Sadly, Ted Butler passed away a few days ago to pancreatic cancer, and I was sad. I mean, this guy's research I've studied for years. I mean, I've been posting videos about Ted Butler's work for years now. I can't even tell you how many videos I've made covering articles, data, so much information he's posted about COMEX corruption, price suppression. I mean, he was very bullish on silver. He said, think of the highest price you could imagine silver could reach and multiply that times 10. I mean, this guy was a legend, and nobody can replace his work. He's been doing this longer than anyone. He's dedicated his entire life to this until the day he passed. Without him, I would not be where I'm at. I mean, he was the one years ago that showed me there's much more to silver than just the supply and demand, monetary thing with preserving your wealth because the declining dollar. He showed me why silver is still held back, but even more importantly, why and how this will not last for much longer, and he will show in this video several examples of why. Now, this one is pretty special because this one, he really dives into corruption. There's a couple of other articles I've covered in the past where he dives into the illegal side of the COMEX shenanigans, and he does not hold back. He is very blunt, and he will show receipts on what he's saying. It's very thorough. A lot of his work is very long. This is an article from butlerresearch.com where you guys can check out all of his work. But all of his work is mentioning silver price suppression. It's great work. I mean, nobody has done it as long and as thorough as Ted Butler. So my heart goes out to his family, and I just wanted to make a video to, as a thank you to all that he's done, and hopefully you guys will also be able to get something out of this video as well. So this is an article, The Coming Move to $50 and Beyond, but this is another article, more evidence of a silver shortage. I will post, if you guys want all of his work, just go to butlerresearch.com. I will post these two articles because I do think these two are great reads. Twice over the past 42 years, the price of silver has risen to $50, once back in 1980 and again 11 years ago in 2011. Obviously, no one would argue that something that occurred twice already is not capable of happening again. On both prior silver price peaks, prices then fell sharply and quickly, but the next coming move to $50 and silver is much more likely to not only exceed the past two highs, but also remain far higher for far longer than previously. In 1980, the price of silver rose from $7 to $50 in a little more than a year, driven essentially by the concentrated buying, both in futures and physical metal by interest associated with the Hunt brothers from Texas, and then fell even more sharply as a result of exchange and regulatory actions to unwind the Hunt's buying, which I've made a docu-series on the Hunt brothers, their situation, which actually, ironically, has a lot to do with how COMEX corruption exists today. Not exactly, but short story. Hunt brothers, three billionaires. One of them actually passed away a couple months ago. They basically bought all the silver on the COMEX and turned it into physical, showing or forcing the hand that there is not all of this physical silver available as the paper contracts that are portrayed, which is essentially how they leverage, how they suppress the price, right? There's not that much silver available, and if we were going by a true honest market, then silver would be a lot higher. But they make all these imaginary contracts that if everyone tried to turn into physical would expose and show the hand. Well, the Hunt brothers did that. They bought up, I mean, they were billionaires, and that pushed the price from $7 to $50, which then Ted goes on to say, the result of exchange and regulatory actions to unwind the Hunt's buying. They banned silver on the COMEX. Silver Rule 7, when silver was $50, they turned it into physical delivery, and obviously the government was not going to allow these guys to own all that silver because there wasn't that much available. So what did they do? They made a law on the spot called Silver Rule 7, essentially banning silver on the COMEX. You couldn't buy it, which obviously shot the price way back down, and which another date was Silver Thursday, which is when the price fell over 50% on a Thursday. But the Hunt brothers were vilified, and for the wrong reasons. Yes, they got into some stuff that they probably shouldn't have, borrowing money here and there, but the public, the media portrayed them as criminals, where saying that they were doing this illegal stuff to take advantage of silver, when really, in reality, they were just like you and I that knew the inevitable collapse of the dollar, that wanted to put their money into something that preserved its wealth. But of course, as this story blew up, the government did not want the public knowing the reality about the dollar and that there was this option. So what did they do? Instead of letting people naturally find out their reasoning, push them as these evil criminals, so then no one will accept or even believe the reasons behind their actions. There's the media side of things, and then there's a far deeper side, the real reason. Just like if I blew up in the media and I told everyone why I was buying silver, of course, they don't want the truth getting out. They would expose me as some, evil guy that's just doing illegal stuff. And it worked. I mean, they broke these guys. These guys, they never, it's a sad story. But anyways, that's just a very quick roundabout. There's a much more than that, much deeper than that, but that's essentially, the gist of the story. But anyways, the epic price run up did show conclusively that speculative investment buying could drive up silver prices sharply higher. In 2011, silver hit nearly $50 again, but this time there wasn't the slightest hint of excessive speculative buying in silver futures, an area I monitor closely. Instead, the price surge was due to the physical buying of silver, mainly by way of silver ETFs, investment vehicles that didn't exist in 1980. The sharp price fall starting in May of 2011 was engineered by interests associated with JP Morgan and did succeed in persuading the silver ETF investors who drove prices higher to sell. Now, he's just giving a little backstory, which is important. You got to know context. It matters, especially when later on in this video, he goes into what's going on. This is just like setting up to show you guys, because if we just went straight into it without the context and without fully understanding the times it's happening, then it wouldn't make as much sense. So I hope you guys stick around, because this is very important, and this is why silver is still only $29 today, for anyone wondering. And also he explains why this will not be able to go on for much longer. Ted Butler's work is the most informative when trying to get a wraparound of silver price suppression. The coming silver price surge to $50 and beyond will be driven by both physical and paper buying and will occur against a backdrop far more bullish than existed in either 1980 or 2011. For one thing, there is far less silver in the world than existed in 1980 as a result of a deficit consumption pattern that prevailed for at least 25 years, 2005. And while there is just as much or more physical silver in the world today than existed in 2011, that silver is now owned by investors, including JP Morgan, in the world's silver ETFs to an extent never witnessed. Of the 2 billion ounces of silver that exists in a 1,000-ounce bar form, for the matter that most is pegged to price, more than 1.1 billion ounces, or 55%, is owned by the world silver ETFs. Another 300 million ounces are held in the COMEX warehouses, making the total amount of silver bullion in recorded form of a remarkable 70% of all the silver in the world. Back in 2011, there was less than half that amount in the world silver CE ETFs. In 1980, investors held no silver in the world silver ETFs since they were only introduced in 2006 and later. The key point here is that there is demonstrably less physical silver available today than in 1980 and 2011. Yet at the same time, there are many trillions or more investment dollars sloshing around and looking for an investment home. One more important consideration often overlooked is that the first price run up to $50 in 1980 resulted in a literal avalanche of silver coming to market in the form of old coins, as well as silver artifacts of every type imaginable, including silverware and serving pieces. Quite literally, hundreds of millions of ounces came to market in the Great Silver Melt of 1980. After all, silver's price had been essentially fixed at a little more than $1 an ounce for many decades before 1980. It mattered little that discounts of 50% and greater were received for silver artifacts melted. The price advance was great enough to provide a windfall for sellers. In addition, the U.S. government would come to sell the remaining hundreds of millions of ounces still held in 1980 over the next 20 years, either by auctions or in coinage for the American Silver Eagle program started in 1986, which that's a very important date to note. In the silver run to $50 in 2011, there was a second wave of melting, but nowhere near as large as the melt in 1980. The striking thing about the Great Melt in 1980 and its minor sequel in 2011 is that someone sells his or her unwanted silver artifacts, they can't be sold again. The unmistakable conclusion is that the next run to 50 will not bring great supplies of silver to the market because there is not that much left remaining to be melted. And just like in 2011, the U.S. government can't dispose of silver since it doesn't own any, a far cry from the 5 billion ounces it held in 1940. All the while, the physical industrial demand for silver from 1980 or 2011 has increased, while since 2011, mine production has been static due to the ongoing price manipulation of the COMEX. Actually, it was down 2% this year, and for the past 3 years, we've had record-breaking supply deficits, over 500 million ounces in the red within the last 3 years alone. That was just my little 2 cents. I'm not going to be branching off too much from his work right here. It's already it's already straightforward enough, right? So remarkably, in owning to silver's great industrial versatility, the former main use of silver in photography almost disappeared due to digital photography, only to be replaced by demand for new uses, such as for solar panels, a use that didn't exist in 1980, and now has grown by leaps and bounds since 2011. Take a look around and try to deny that modern world isn't becoming more electronic and electrical every day, and that the world's best electrical conductor, silver, won't play a vital and expanding role. The absolute key to the coming silver price surge to $50 and beyond is the same force in play of 1980 and 2011, namely investment demand. But whereas investment demand suddenly exploded in 1980 and 2011, The silver investment demand has been surging for years to this point, but engendering such a rabid belief in the higher prices to come that any thought of liquidation on lower prices seems absurd. There's even a grassroots internet movement that has sprung up over the past less than 2 years that is devoted to promoting the buying of silver that numbers in the hundreds of thousands. No such movement exists in any other commodity, not even gold. And I've mentioned that a lot, right? It's called Wall Street silver, not Wall Street gold. It's a silver stacking community, not gold stacking community. I mean, there's several examples of this. But anyways, perhaps the biggest difference between the past two runs to $50 in silver and the coming run is the state on the ongoing COMEX price manipulation. And here he goes into COMEX manipulation, folks. If you are listening to me speak right now, congratulations. You now are in the meat and potatoes. Most people probably clicked off thinking they don't need to know anymore or that they already know it all, which they don't. Ted is the top expert at this, and you're about to learn a lot. Perhaps the biggest difference between the past two runs to $50 in silver and the coming run, I like how he's so confident. It's not even like it is, and the coming run, is the state on the ongoing COMEX price manipulation, orchestrated by the large traders classified as commercials, but in reality are mostly banks, which are just speculators masquerading as legitimate hedgers. In fact, the origins of the long-running COMEX price manipulation had its roots in the Hunt brothers' bust in 1980 and began in earnest in 1982, 40 years ago. On second price went up to $50 in 2011, COMEX price manipulators, at this time led by JP Morgan, bent but not break, and it succeeded in turning prices sharply lower starting on May 1st, 2011. And by the way, he's very public on how corrupt the COMEX is. I mean, he hates these. I mean, he is very, very public on how illegal and just how corrupt this exchange is. The near financial death to JP Morgan and other large short sellers in April 2011 taught the bank a lesson that could only be learned by first-hand experience. It was the unexpected surge to $50 in 2011 that taught JP Morgan of the critical balance between how much physical silver existed in the world and how easily an increase in investment demand would send prices sharply higher. Being the criminal masterminds that I believe JP Morgan to be, it has put this sudden realization into practice by continuing the downward price manipulation with selective and concentrated short sales of COMEX futures contracts to keep silver prices as cheap as possibly, but with a criminal genius new twist, namely accumulating as much physical silver and gold as it could while keeping prices artificially depressed. And it worked like a charm over the next decade, with result that JP Morgan and its hidden interest accumulated more than 1 billion ounces of silver and over 30 million ounces of physical gold. If anything, I believe my estimates may be too low rather than too high. Sir, it cost JP Morgan some regulatory frictional expenses over the years, including 3 of their employees getting sent to prison, well, 2, including a $920 million settlement with the Justice Department and CFTC. But what's hundreds of millions of dollars when the potential payday is in the tens of billions of dollars? Therefore, the biggest difference between the two prior runs to $50 in silver and the coming run is the coming run will mark the end of the long-running COMEX price manipulation, right? And here we go, right? Here we go. This is what I'm talking about. To be blunt, the COMEX silver manipulation has been the longest running price manipulation in history, and the principal manipulators, a series of large banks and financial institutions, made a boatload of money for nearly the entire 40-year episode up until mid-2019 or so, as JP Morgan began its long-awaited exit from the short side of the COMEX contracts and fully completed by the spring of 2020. Abandoned by their former ringleader on the short side, the remaining large commercial shorts began began to suffer large losses for the first time in nearly 4 decades. Most recently, since March 8th, the remaining big commercial shorts on the COMEX, no doubt sensing the coming end to the long-running manipulation, resorted to the only true remedy for closing out as many of their COMEX silver and gold short positions as possible, namely by arranging what I believe to be the final sell-off and tricking the commercial's main counterparties, the managed money traders, to sell heavily so that commercials could buy back and rid themselves of as many COMEX short positions as possible. And it certainly appears that the commercial manipulators have succeeded in doing just that, as the commercial only concentrated short positions in both COMEX silver and gold have reached historically low levels of late. Throw in an unmistakable developing physical silver shortage, the inevitable result of a long-term downward price manipulation, and the ingredients for the next price run to $50 and beyond will be firmly in place. Today, there are more people than ever that understand that silver has been artificially depressed in price and that they are putting their money behind that understanding. This was not the case at all in 1980 or 2011, and just about guarantees that silver will soon lift off in price to the former peak levels and beyond. There has never been a setup like this before, and would be a shame not to take advantage of it. Ted Butler, October 27th, 2022. This is good stuff. Now, if you guys really want to go into his work, this is a really, really long one. I mean, this one, is probably a 30-minute read if you really want to break it down. Or I guess for me, it would be, it's probably like a 10-minute read for if you just like casually want to. But I really try to understand what he's saying, right? It's easy to read something, but to really soak it in, especially when we're talking about these numbers and some of this stuff we're mentioning, it's good to reflect upon it. Like right here, crooked COMEX commercial positioning aside, it's important not to lose track of where silver stands in the much bigger picture of the ticking time bomb of the physical shortage. If you can picture the past 40 years of COMEX silver manipulation as a clock, with 12 marking the point at which manipulation ends, we can't but be a few minutes from striking 12. While those last few minutes may seem interminable, that's because of how long it's taken to get to this point, not due to the amount of time remaining. Mostly important, focus on what guarantees that we are only a few minutes to 12, namely the deepening silver or physical silver shortage. And then the long-term manipulation on the COMEX may have succeeded to this point in suppressing the price of silver, but it is the law of supply and demand that will have the last word, and fairly soon. And I like that because I've mentioned that before. You can try to manipulate something and suppress it, as long as you want, but eventually that will all unfold. You cannot suppress it forever. Why? And that is because of the law of supply and demand. Low supply, high demand pushes the price up. You can try to hold the price down, but when you have a diminishing supply and a rapidly rising demand, it's inevitable. And when he wrote this, November 22nd, 2023, silver's price was $23.70. It is June 16th, 2024. So less than a year ago, when he wrote this, silver was $23.70. Now it's up to $29.30. It reached up to $33, and people are still looking at this as, like it's not done much, but it's done a lot. But people get desensitized to higher prices, so it's harder for them to step back and look at the bigger picture. It's a lot easier to just say, okay, it was 33, now it's down to 29. Oh man, it's not doing much. But when you step back and look at how much it's done in the past 3 years, think about in 5 years from now what could happen. Think about 10 years. Think about 20 years. What do you think silver's price could be then? The dollar wouldn't even exist by then, but silver will always be valuable. It's the most highly conductive metal for thermal conductivity and electricity and light sensitivity. So, folks, we are in a peculiar situation that like Ted said, would be a shame not to take advantage of. And actually, I heard before he went into the hospital last week, someone asked him about his last words. I mean, I just heard this from a friend that I think mentioned it to Bix, saying if he had one last thing to say to investors, it would be don't sell too early. Yeah. So, and I agree, right? I agree. Anyways, I hope you guys enjoyed this video. Rest in peace, Ted Butler. Your work will never be forgotten, and I will continue to study it for several years to come. He's posted many, many articles. I've covered a lot of them, but I'm sure if you type in like Silver Slayer Ted Butler on YouTube, you'll see probably 10 or more videos that I've covered of different articles of his. These were very modest. He's gone a lot deeper into showing evidence of his claims. This was like a summary of, the findings. But if you guys want the actual proof, he goes a lot, and I mean a lot deeper into it in some of those, but those are very long reads, and this video wasn't meant for that. This was just kind of showing the overall summary and conclusion of his findings. So anyways, I hope you enjoyed this video, and if you did, make sure to like the video, and let me know what you think. Anyways, thanks for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.